What's up, guys? Welcome to Stock Talk with Nico Kritikos. Today, I'm going to be showing you 5 stocks for 2024. All of these stocks I do own, and the first one on my list is going to be Starbucks. This one I've owned for quite a while. I bought in a little bit too early when it was about $100 a share, and since then I've been lowering my cost basis. There's two things right now I don't like about Starbucks. One is the CEO. An interview that I saw last week with the CEO did not give me a good feeling about if he knows what he's doing or not, if he's looking at the macro environment the right way, if he's looking at the way this company offers products and just all that stuff. He didn't really give me a great feeling about that. So I'm not 100% confident in the current CEO. That's something I keep an eye on. The other problem with this company right now is their balance sheet because they have a lot of debt and a lot of negative equity, and that's a big issue. Okay. So, with that being said, though, it's still Starbucks we're talking about. They have an enormous number of stores around the entire globe. They have an incredible brand name. They have incredible customer loyalty. They have a great product. They just probably got too far ahead with raising their prices, and they probably should come back on that. There's also a lot more competition with things like Cosmix and different energy drinks and Dunkin' Donuts and Panera and all these other companies offering similar things. So that's something to keep in mind, but it's still Starbucks. I still am confident that right now at $75 a share, this is greatly undervalued, and this should be $100 a share again, no problem. Hopefully, we can see that by the end of the year, but it might even go into 2025. Those are my thoughts on Starbucks, though. Next up on the list, we are going to be taking a look at another stock that I own called Lululemon. This is an apparel brand. And this one I really like because the return on invested capital numbers are super strong for this company. The balance sheet is good. They're consistent. Their net income and revenue growth is strong. And the stock chart is just, as of right now, it's pretty much trading flat over the last 4 years because 4 years ago, the stock was $320 all the way up to $370. So we're trading right around that price range right now. So I think this is a great chance to start making a position in this one. As you can see, I'm down about 7%. Not terrible. How I said, I think soon enough the stock will bounce back. If we look at the numbers they're supposed to put up for the upcoming quarters, it looks pretty strong. It looks like they got growth coming in for both 2024 and 2025. Let's take a look. We got $12.77 of EPS for last year, $14 this year, and then $15.80 for next year. So the growth is looking good, and the P ratio is pretty cheap right now. The forward P is 24, when normally it was trading it up, close to a 32, right? So this one I'm also very excited about this one because I think this one should bounce back. The next one on my list is Adobe. This is another cool one. Everybody knows Adobe software, and they have a sticky product. They have a lot of customers on a subscription basis. They have artificial intelligence making their business more profitable, offering new services, and just making their software better with video editing, photo editing, and all the other things they do. So now I'm down, what, 4.5%. So slightly down in this one. But I'm pretty confident in this. What you're going to see with all the companies on my list today, they're all big companies. I'm not really investing in like startup companies or like micro cap companies where it's kind of risky. I look at these as safer investments. So 8 shares of Adobe, and again, if we look up what they're supposed to do for EPS, the numbers look good. The P ratio is not too high. Let's see, we have what happened here? Okay, well, I guess it doesn't want to load, but it's still Adobe. That's one I'm happy with. Here's another one. We got Monster Energy Drink. A lot of people have been talking about Celsius, but I just like Monster because it's been around longer. They have a better track record, and they've shown that they could be consistent with their growth. It's honestly amazing that they've been growing the company for over 20 years now just by selling energy drinks. What is it? Yeah, I mean, now this one I have a very small position in, only $1,100, because the valuation is not super attractive right now. Let's see. No, it's still not showing us, but the valuation is not super attractive. If we look at the forward PE, it's not like it's super cheap right now. So that's why I'm just making a small position just so I can keep an eye on it. And if the stock does go down or it stays flat for a long time, then I'm going to buy more. So we're looking at a 4P of 29. So honestly, not horrible. It's honestly probably on the cheaper end of things. It's just not a great deal. And if we look at what analysts have them doing for EPS, we have $1.56 last year, $1.79 this year, and then 204 next year. So again, it's consistent. Celsius is very interesting, but Celsius is also a lot riskier. Celsius has had a huge run up. I understand they have lots of growth ahead, right? The numbers, look at the stock's up over almost 6,000% in the last 5 years. It's crazy. Just in the last 12 months, it's up 135%, and it looks like it's on another upward trajectory here. So who knows? Maybe the stock goes on another huge run, and the stock is 2x what it is now in at the end of the year. But I just like stuff that's safer, so I'm going to go with Monster. Then finally, we have Tesla, another stock I think is undervalued, probably has the biggest potential for growth and for the different industries they're in: energy storage, robo-taxis, and I guess you could say EVs, but really robotics is probably even a bigger industry. So this one, I'm just waiting for this to be $300 a share again. I think it's going to happen. I mean, look at the stock chart here. I mean, it's again, this is another one where it's like trading flat from where to where it was 4 years ago. So now Tesla is a different story. With my original cost basis was $18. Now it's 40 because I've sold so many shares and then bought back so many shares. So the cost basis is up. But this new position that I've built this year is kind of for the next generation now of what is Tesla stock going to do for the next 3 years or 4 years. So those are my 5 stocks, and let me know what you guys think down below. Thank you for watching, and I will see you in the next video.